But in a lot of ways, I look at equity markets as kind of the perfect proxy for, where we should be focused. And if you look at the products that ultimately have captured the most value and saved, investors the most money and, been the best vehicles for people to get exposure to equity markets, it's those products that give you broad-based exposure. And so I think that we want to stay pretty committed to that.
Hey everybody, Tanner here with WAGMI Ventures. On today's episode, we have Austin Diamond, co-founder and CEO of Alongside. For anyone who's new, this is the WAGMI Ventures podcast, where we do snapshots with interesting founders from across Web3. Check out wagmiventures.io to learn more about the syndicate behind the podcast. But for now, let's get into it with Austin from Alongside. All right. Hey, everybody. I'm here today with Austin Diamond, co-founder and CEO at Alongside. Austin, how are you doing today?
Doing great. How about yourself, Tanner?
Yeah, I'm doing good. I'm really excited to chat here. So why don't we just jump right in? If you could just tell us maybe a little bit about yourself and your story, what's brought you to building Alongside?
Yeah, absolutely. No. So, truthfully, this is about 12, 13 years in the making. I was a super weird kid. Wanted to work in finance as a teenager. Was coaching a soccer team. One of the dads was at Deutsche Bank. I kind of, weaseled my way into a role basically fetching coffee for him. It was interesting. They managed a portfolio of, equity index funds. So their whole strategy was we buy markets, not companies. And so it was there that I discovered this open secret. Most active fund managers do not outperform a simple benchmark. So, feels like this crazy secret in finance where, a janitor or a teacher that just dollar cost average into something that tracks the S&P 500 outperforms, the overall majority of hedge funders that, you might tune into on CNBC every day. So, viewed index products as this unbelievable equalizer for, regular investors. Decided pretty early on, I didn't want to work in finance in that capacity. I ended up, moving out to San Francisco. I spent about 6 years working in tech and a couple more in venture. And, I think, as an observer of crypto as a category for the last 6, 7 years, it felt like all the same dynamics around, maybe my inability to stock pick play out, almost exactly the same with my ability to pick winning tokens. And ultimately was just a believer that, the entire category, was going to be much larger, a decade from now. And ultimately just wanted directional exposure to that. So in a lot of ways, built the product for myself, but a long time in the making.
Super interesting. Okay. So how do you describe what Alongside is building kind of in its totality here?
Yeah, absolutely. I describe this as an on-chain Vanguard. And I use Vanguard for a number of specific reasons, which we can get into. But, really the goal is just to build low fee, low cost products that just enable, total market thematic exposure to the entire category.
Got it. Let's jump into Vanguard here because I'm actually really curious in general. Just if you could maybe just provide us a little bit of a history around index funds, and for those who aren't super familiar, like why they exist, what they enable, why they became popular, and I think you can probably talk about Vanguard in that telling.
Yeah, absolutely. So, really interesting history. So I believe it was about 1960. There were two professors, Ed Renshaw and Paul Feldstein, that wrote a paper called The Case for an Unmanaged Investment Company. It basically lays out the entire thesis that, something that just tracks a market benchmark will outperform most portfolio managers. And it was super divisive at the time. Funnily enough, Jack Bogle, who in a lot of ways I describe as like he's the OG Anon, actually penned a paper, that was a rebuttal to it under a pen name John B. Armstrong. And, basically came out guns blazing saying that, indexing is a terrible strategy. And, why would anyone do that for a multitude of reasons? Fast forward to today, he's credited with, sort of founding the concept of index funds. He actually wasn't the first to do it. A firm called Battery March was a few years before him. But, it was actually done in a lot of ways. I consider Vanguard to be, one of the first companies to progressively decentralize. And, when you look at their history, one of the things that's really interesting, they spun out of Wellington Management, which is still around today. And, over time, holders of Vanguard funds became, the owners of Vanguard itself. And that created this, crazy incentive mechanism where, holders of those funds do not have an incentive to raise fees on themselves. And so subsequently, devoid of the kind of, pressure from shareholders to continually do that, they were able to offer, just the lowest fee products over the course of the last, several decades. and took a very different approach than the BlackRocks of the world, which actually do manage more money in terms of assets under management than Vanguard. In that, BlackRock decided, we're going to go out and build these big sales and distribution teams. We're going to make sure that this is in every pension and 401k. And, Vanguard took the approach of, we're going to be committed to low costs, and we're not going to build out a massive sales team to get distribution on these. Eventually, people will recognize that this is the superior product and they will come. And, I think in a world where, in DeFi, nothing is as opaque as it was, back then. Everything is, totally open and transparent. To me, the winning product is the one that is just ultimately, the best for end holders. And so, in this case, I think, that's the product that can offer the lowest fees. And, I view ourselves as like, another coming of that, if we're lucky. So just, lots of history to be able to draw from. We're super lucky to get to stand on the shoulders of like 50 years of, Jack Bogle and plenty of others' work messaging to the public that, indexing is the way. And I think, there are just a lot of parallels with how, we look at crypto asset markets. I think historically speaking, everything has been about trading, and you go onto crypto Twitter and, there are 8,000 different decentralized options protocols to play around with. I tend to think that for most people, they're just better off, buying the market. And so, in a lot of ways get to stand on the shoulders of everyone else that's really, driven that home over the course of the last few decades.
Okay. So if we take a step back, what were some of the earliest challenges creating this first on-chain broad-based crypto market index? And how did you and your team think about solving for those challenges?
Yeah, great question. So, many of them are technical. There are a few, products that are comparable that we're big fans of. I'm sure, maybe your listeners are familiar with groups like Index Coop or Indexed Finance. Obviously, they're the more TradFi players like Bitwise or Grayscale. In our case, we thought it was really important to be able to, offer a single product that gave you total market exposure. And so, that comes with a set of technical challenges around, how do you support assets that, live across a number of different, layer one blockchains. And, historically speaking, some of those other products have been able to, easily bundle products that are, compatible with Ethereum. But if you want exposure to, L1s beyond that, and, many other ecosystems beyond that, how do you do that? And so, we went on this, pretty long journey trying to figure out how to do it. Obviously, maybe an easy way to do this would be, synthetically. There's a product on the market called TCAP that does a reasonably good job of this, through a CDP-like mechanism. And, the challenge with that is, we thought it was really important to make sure that prices are continually, pegged to the underlying asset values. And, in those kinds of cases, they can swing pretty dramatically. A lot of it, is held up based on, whether there's mint demand to, lock up positions like that. And so in our case, we felt like, the only way to ultimately, achieve all those goals is to have everything, 100% fully collateralized and backed one-to-one by all those underlying assets. And so, structurally decided to, structure it a bit like, kind of a wrapped asset approach where, all those underlying assets, there is a trust assumption it being, held with a custodian, and in this case, Coinbase custody. And an ERC20 token is then minted that can then be, redeemed for all those underlying components. And we felt like, that was the path to keeping prices pegged correctly, to making sure that, everything was continually fully collateralized and ultimately the best product despite some of those trade-offs. But, definitely, took us a while to get there. And I think that, we had to be pragmatic around accepting some of those trade-offs. I think, with time, the goal is certainly to build a product that's 100% decentralized. But I think, those were probably the biggest challenges in just figuring out, in order to stay true to this total market philosophy, how to ultimately do that, given some of the limitations around, just infrastructure available to us on chain.
Yeah, super interesting. Okay, so what were some of your earliest insights that helped you identify the right methodology for creating the AMKT index in terms of token composition?
Yeah, absolutely. So I would say that I think the biggest thing is that we don't have any unique insights with respect to which underlying assets are ultimately going to move a certain direction. I think that's really kind of the whole game, is that we want to be as close as possible to just a mirror to the market. And funnily enough, there's actually a great study I could send you. It was done by an economist out of Columbia that basically looked at discretion and its role in index methodology. And he basically looked at the S&P and how they decide to include assets, and noticed that a good chunk of those were added discretionarily. And that subset that ultimately was added with any amount of discretion underperforms the set that's just purely rules based. And so as we thought about designing the methodology for this, we felt like the structure that made the most sense is the one that's as hands off as possible. I personally have, individual opinions about, specific assets, all of which, of course, are pretty loosely held. But, we didn't think that it made any sense for us or, the DAO to, kind of tilt our hand on the scales with respect to, which assets ultimately should, play a role here. The goal really is just to, mirror the entire market as closely as possible. And I think, really with time, like I'll talk against my own book here for a moment. I think on a 5 to 10 year time horizon, the idea of a total market product for crypto assets won't make sense. And that might sound a bit counterintuitive. But, kind of our thinking is that, we're going to see this migration of all kinds of other asset classes eventually live on chain. And at the end of the day, these are just the rails that everything will run on. I liken it almost to like if we had a product now that was like an internet index based on anybody that had a website, right? That wouldn't make any sense. And so I think with time, that's going to evolve quite a bit. As it stands now, we just want to give people as, clean an exposure to, the category itself as we possibly can, and don't want to, tilt our hand on the scales with respect to which assets are ultimately included.
Yeah, super interesting. So kind of on that last point, what are some of the biggest mistakes you see institutions make or, maybe some of the wrong ways they're thinking about things when they're thinking about broadening their exposure to digital assets and Web3?
Yeah, absolutely. So, there are a couple of things I think are pretty pervasive myths, at least among kind of the institutional investment community. One is that, none of these assets actually are backed by anything, or that, there are no cash flows. Like I always point to one of my favorite sites you might be familiar with, Token Terminal, that looks at, actual protocol fees being generated by a number of these different protocols. And, one of the things that I find most interesting is that, in many cases, they're generating, serious money in any given day, but there is no path for any of those, assets to go like list on the New York Stock Exchange. And in my opinion, like there's this parallel economy forming that exists on chain that's global in nature that can produce, fees that are akin to, a company that'd be in a position to go public. So, I'd look at things like, Uniswap tokens, in any given day, it does as much volume as Coinbase. It spits off plenty of fees, obviously, as it stands now, just on the supply side for, people actually providing liquidity there. But, there's this ongoing, governance proposal around, implementing a fee switch. A lot of ways I think these assets parallel, any other assets, and they're backed by cash flows the same way that lots of others do. And I think a lot of institutions don't look at it that way. They look at it like, purely through the prism of that kind of digital gold thesis. Or they think everything is still, I think, one misnomer that the whole space has made is, calling things cryptocurrencies. I think, one mistake a lot of people I think make is that, they define everything as a cryptocurrency. I don't necessarily think that's the case. I think a subset of protocols are trying to be currencies and many others are totally not. And then as far as, how I've seen, kind of others make mistakes with respect to allocating, I mean, I think the biggest is just that many of the vehicles that exist for, total market or, thematic or even, single asset exposure in the category are done through these wrappers that can't ultimately support continuous creation and redemption. So what does that mean? Well, you can't end up having price reflective of the net asset value, when there aren't really market forces to press that, in the right place. And so what ends up happening is, you look at things like the Grayscale Bitcoin Trust, when, markets are, for lack of a better way of putting it, pumping, that those will trade at a big premium because, it's difficult to create new supply or you can't. And, you have the opposite problem when, people need liquidity and markets are moving in the opposite direction. And so you look at those products today and some of them will trade at, 50% discount to net asset value. So, their mechanism for getting exposure to the category is through a very imperfect wrapper that's not necessarily reflective of spot exposure of the underlying asset. Other versions of this exist where they're just like handful of, blockchain equities. So you end up with a basket of, basically at the, better end of the spectrum, equities like Coinbase. On the other end, like, crypto mining stocks with, huge amounts of leverage. So, I don't view those as particularly good paths to getting, exposure to the category either. And I think, because of their availability and just familiarity as far as structure for many of those institutions, they've chosen to go that route. And, I tend to think, and, I'm very excited about the prospect of, more RIAs, more, larger institutions getting access to, tools that make it easy for them to custody assets like this or, have client assets allocated to products in crypto. And, I think despite the bear market over the course of the last several months, it's been really encouraging to see a number of those institutions kind of continue to, double down. Obviously, you have things like the partnership that BlackRock put together to integrate Aladdin with Coinbase. You've got Fidelity continuing to make moves in the space. So I think that's all really encouraging. And with time, I think a lot of those kinks will get worked out.
Love it. Yeah. Okay, so Austin, what stood out as most surprising in your work building alongside thus far?
I would say that, zoom out a little bit. I think, I spent about a decade, kind of working in tech before, ultimately, starting alongside. And I think, at least for a very long time, I felt like, it was a very difficult feat to start a company and get going. And I think, one thing that has certainly been positive, it just feels like when you make the choice to go and do that, counterintuitively, the world tends to conspire in your favor. And so I think I've just gotten really, really lucky with respect to the people that we've been able to attract to come work on this with us. And I never in a million years would have assumed that we'd be able to bring together this kind of talent. And I think, that's probably the biggest surprise is, despite the last year being, super challenging on kind of a macro basis for the whole category, the amount of talent that continues to flow into it, only seems like it's compounding. And I think that's probably one of my bigger surprises is just the extent to which we've been able to bring together just unbelievably talented people from all kinds of walks of life to be able to come work on this. And I think that, in light of the last several months being a bit ugly, at least for markets, I think the one thing that makes me incredibly optimistic is that, that talent continues to, I think, flow into the space.
Yeah, love it. Okay, so Alongside's got a really solid community on Discord. And so one of the things I'm curious about is what are these conversations like with your community and what are they most excited about as part of the Alongside journey themselves?
Yeah, absolutely. I would say that, some view it as a bit refreshing that, like I'll give you an example. When you open up our Discord, there's a message from me there that basically articulates that, if you come to the Discord for alpha, the truth is our product is literally designed to give you market beta. And so, one of the things I think is different relative to some other communities that are sprouted up is like nobody's trying to show you anything. I joke that, like one thing that's very much not allowed in our community is like, someone trying to pitch you their, options trading course or
right.
whatever it may be. And so I think that to some extent it's a bit of a, separate community from what's, traditionally existed on crypto Twitter or in other kinds of forums and Telegram chats, wherever that may be. And, we're very much not, shillers, for lack of a better way of putting it. We're, directionally excited about the growth of the entire category. That makes us a lot less tribal. I think that's one thing that's also pretty pervasive in crypto is a sense of tribalism around, maybe your preferred layer one or, application layer asset, whatever it may be. And in our case, our community is there just to kind of support the growth of the whole category. And, we have a pretty clearly defined enemy, for lack of a better way of putting it, in the types of people that maybe are, shilling you, some short-term trade. So, there's a long-termism that I think that, we certainly want to foster. I think the other thing that's at least been surprising with respect to our community is how global in nature it's become. I'll be honest with you, I did not expect that at all. We now have, 10 different languages and forums supported in our Discord, which I never in a million years would have thought would be the case. I think that's been a challenge for us to, make sure that we can communicate with such a global audience. But I think the reason that people are drawn to it is that, really we're not shilling anything. We're evangelists for the whole category. And, I tend to think that, people find that a bit refreshing, but we've got plenty of work to do.
Yeah. Okay. So how are you guys thinking about the evolution of Alongside over the next couple of years, say? Let's say we just anchor it like 2 years. What's on the roadmap? What are you guys excited about? What directions are you most curious about? Anything in that direction?
Yeah, absolutely. So I would say that, initially we want to stay super focused on, products that just give you total market exposure. I think that, the market itself, I don't consider to be super mature in the sense that, you can slice and dice all kinds of different thematic products where, there's enough density of assets where that kind of diversification makes sense. But I think over a long enough time horizon, the ability to, break things down into specific themes to get directional exposure to things like DeFi as a category, I think make a lot of sense. So on, say, a 2-year time horizon, I think, those are some of the things that we'll be looking at. But in a lot of ways, I look at equity markets as kind of the perfect proxy for, where we should be focused. And if you look at the products that ultimately have captured the most value and saved, investors the most money and, been the best vehicles for people to get exposure to equity markets, it's those products that give you broad-based exposure. And so I think that we want to stay pretty committed to that. I will say, and this is, probably further out than 2 years, I had hinted at this before, I tend to think that on a long enough arc, these products look very different in that you'll have all kinds of other assets live on chain in some way, shape, or form. And our goal is really to build a great foundation to go build products that ultimately can support that. So you can have, a mix of things like equities living on chain and real estate and alternative assets and, crypto native assets. I think that's where, if you zoom out maybe further than 2 years, we'll want to remain focused. I'm super excited about efforts to do that we're seeing today. But, on a long enough arc, I think, that's where things are likely to be. And, won't necessarily just be, exposure to things that are, carved out entirely in the crypto economy. I think what the crypto economy looks like, a few years from now really is going to encompass a lot more asset classes going on chain. I mean, before this, and, you all operate a venture fund, like company, in our portfolio would go public, we'd be dealing with a transfer agent for days. And, people, even at a retail level, experience some of the perils of things like T+2 settlement and, the settlement times that tend to exist in equity markets. Feels to me like there's almost an inevitability to, certainly when blockchains can support that kind of throughput, equities and, other asset classes living on chain. And that's the thing I think, we're super excited about in a really long time horizon.
Yeah, love it. Okay, so can you talk a little bit about your recent fundraise announcement where I'm curious specifically, like what was that like conducting a raise during the sort of bear market we've seen? And how did you guys think about going about it in this particular macro environment?
Yeah, absolutely. So I'll peel the curtains back on this a little bit. I mean, not all of it was done, over the course of the last couple of months. A good chunk of it was raised, not quite a year ago, but we decided to announce it, shortly after we shipped our product. We thought, that was the thing that made the most sense. And, I cared a lot less about, the vanity of a fundraising announcement and a lot more about, that translating to eyes on our product. So, rolled a couple of fundraisers into one. But, it was interesting. Obviously, that first piece was done during the halcyon days of the bull market. So I got a very different experience. And then, when we brought in WAGMI and a number of other incredible investors in the more recent tranche of that, groups like Franklin Templeton, some of our existing investors doubling down as well. It was a very different environment to fundraise amid. And, I think that crypto was one of those categories where, in a lower interest rate environment, I think there was a big flight, to get exposure to. And, easy come, easy go. It was, definitely very different, when we, looked to close this up a couple months ago. But I think that, we made a lot of progress over the course of that time. And that, ultimately was what was able to solidify things.
Yeah, I love it. Okay, Austin, maybe two last questions here. First question, what's your most generalizable advice for founders building in the Web3 space?
Have access to lawyers. That was one that I think I wasn't expecting quite as much. We initially, worked with quite a bit of outside counsel when we first got started. And, truthfully, I think there are a lot of gray areas in this category. And, you want that sort of support and advice. It's a way of saying basically, there are a lot of things that I don't know that I think are areas of expertise that, we certainly felt like we needed to have really early on. So, I wasn't in a million years expecting to bring on, full-time general counsel as one of our first hires. Turns out, I think that was a great move. And I think it's pretty counterintuitive and, not something I think most founders would consider. But at the end of the day, we have a super committed person that's, kind of has our back looking out through all this. And, it's actually made it easier for us with respect to, not having to rely as much on outside counsel. And so that was one piece of advice I think that's more unique to crypto than, having spent, quite a bit of time in tech. That was one thing that, I feel like I wish I knew earlier on. I think we could have saved quite a bit of money and time. So that's one thing. I think beyond that, crypto is 24/7. And, I think a lot of founders have this, propensity to, be pretty all in with things. And, I definitely think that it can be difficult to manage, being up, 24 hours a day, managing a community in different time zones. And I think that, one thing I probably underestimated is the importance of having at least some amount of rest. Kind of do as I say, not as I do in this regard. But it's something that I feel like has become, more ever present for me.
Super interesting. Yeah. Okay, Austin, what are you guys working on right now? And what's the best way for people to follow along on the journey?
Yeah, absolutely. So right now, we're working on, kind of leaning into the fact that, our first product, AMKT, is, an ERC20 token that you can build all kinds of really interesting products on top of, and that, is composable throughout DeFi. So, look out for us on a number of different DeFi protocols here in the pretty near term. As far as where you could find us, we definitely do have a presence on Twitter. My co-founder Gauthier himself, has become quite the shit poster, and our alongside account, also I think does a good job of kind of telling our story. And then certainly our Discord, where our communities come together. I believe we're now at just over 8,000 in that, and it's pretty open to people from all over the world, which is a lot of fun to see. And then, of course, our website that's got, kind of our complete documentation. I encourage everyone to dive into that and, poke holes into the way we structured things, ask questions. Everything's pretty accessible there.
Love it. Austin, thank you so much for the time. Everyone check out their website, Discord, Twitter. And Austin, thank you so much for coming on. Have a great rest of your week here.
Tanner, thanks for having me.